do you guys feel about Ireland and Spain?
So, can I just do Spain only because I set up and ran Cushman & Wakefield Spain for 6 years. It's close to my heart. I was with the economics minister on Thursday of last week, Spain. I mean, the bad bank's been created now, and the property, it'll be like the NAMA of Spain. It's gone through the
Is that good?
I'm not the economics minister.
Turn it into a reef and-
Well, no, I think I'll only say one thing. I think that they'll try. Peter's got a mischievous look at his face with regard to that. I think that they will learn from some of the mistakes that were done with NAMA. And I think that the Spanish banks and the cajas in particular, which are the sort of lending banks, local banks, will be putting an awful lot of real estate into bad real estate into the bad bank, if you like, which has a 15-year life. I wouldn't recommend Andrew or Peter to invest in Spain just now.
Well, let me just do, in terms of the NAMA, can I just do a little poll of the room? How many people here have had any sort of conversation, contact, discussion, etc. with NAMA with regard to doing some kind of transaction with them? How many people have been in touch with NAMA? All right. How many people have actually done a deal with NAMA?
Sort of.
Right. It hasn't been very effective so far.
I mean, we've got a situation with NAMA where clients are in discussion with NAMA, and NAMA being so obstructive that their assumption is that they're effectively saying, make us an offer for the loan, but it's difficult to know quite what's driving them. But in terms of Ireland, we have seen some clients look at Ireland as seeing a potential opportunity now, on the basis that they think there was an overreaction in terms of capital values in certain parts of prime Dublin and possibly prime Cork, and that once sentiment changes, there'll be a yield shift. And it only needs some banks to come back into the market and start lending. And sometimes in terms of the government gilts and bonds, that yield shift's already happened.
And we're seeing that. I mean, on our numbers, I mean, the 2011, the values fell by 10%, which pretty much cancelled out your income return, because you are getting an income return there now of close to double digits. And through the course of this year, we've started to see just small, modest improvements in the market values. I mean, yes, the IPD sample is very prime, but I mean, given the extent to which values have been written down, we are effectively now seeing the bottoming out there. And through the course of this year, the last 3 quarters, we've seen modest improvements in terms of the market values on properties in Ireland.
I think in terms of Spain as well, we've seen 1 or 2 situations where clients have looked quite closely at Spain and seen deals which they thought are very attractive deals potentially commercially, where the selling banks providing stapled finance and subordinating that to a priority return on the equity. And they've got quite close to doing some, and in one case have done a deal, but in other cases they've got quite close. And it's been, the thought process has been, we think this is a really good deal based on the equity we're putting in and the fact that these sorts of assets don't come onto the market too often. I mean, they're good sort of retail shopping centres and sort of dominant within their area. But in the end, in both cases, they decided not to do it because if it went well, they would be perceived as risk takers. And if it didn't go well, they'd impair their ability to raise equity. And I think it comes down to this issue, there's so many political uncertainties, it's possible to really price it accurately at the moment.
I mean, I think it's a very confused landscape. I mean, there's an instinctual part of it as someone who's lived through a few crises and debacles that it's come down so far that there must be an opportunity in Ireland, and it has to be there. There's got to be something going on. And the Irish people and the economy seems to be such an energetic, friendly lot that you sort of believe they're going to crawl their way out of it. But on the other hand, in this country, there's a justification for making prime investments in London based on the yield spread between prime and government bonds. But if you look at the yield spread you're getting off of prime in Ireland, based on ERV, not based on whatever the passing rent are, suddenly there's no spread over bond yield over Irish bonds at all. So how come that logic is such a wonderful justification here, but somehow we don't apply it in Dublin? It doesn't make sense. I think instinctually there must be an opportunity there. Logically, it's hard to justify.
Could that be though partly because that sort of differential between property yields and gilt yields is part of the sort of sense of the assumption that there's a risk-free rate of return, which there isn't now, and the market's just got to move from that and say that the comparison with gilt yields isn't necessarily the right basis of valuation anyway. It goes back to the thing, well, should it be?
Yeah, it goes back to the
credit
fact
default
that
swaps,
the spread between over gilt yields in this country is sort of irrelevant because gilt yields are artificially low.
et cetera. Yeah.
And that therefore what you're saying is the gilt yields in Dublin may be artificially high.
And your reversionary yield,
But are actually coming down because of market demand.
and your reversionary yield in Ireland is about 6.5%. So if you work it off the market rents versus, I mean, okay,
Right.
your income yield off your rent passing is about 10, but yeah, you lose a lot of that if your tenant goes into default, but it's 6.5 worst case scenario if you can relet your asset.
I mean, taking Karen's point with regard to Spain, unemployment's incredibly high still. And if you look at retail, you look at office occupiers, they're not expanding at the moment. And I think on top of that, with the structural issues about Spain and the euro, there's a health warning. But on Dublin, and I think it's only Dublin, I think in Ireland, really, isn't it?
Yeah. Well,
Dublin,
court for retail.
the Irish have an optimism, and they bounce back quicker than most, I would suggest. So I think that if you get it right, there are some properties, aren't there, now in Dublin that are seeing significant take-up on good rentals.